Thank you very much for finding time to meet us here in the studio of Invest Foresight, a media partner for this Gaidar Forum at the Academy of National Economy and Public Administration. And just to start with, how do you find this anniversary forum? Do you think it is a successful event? Well, this year it has attracted over 19,000 participants, but figures are something different in substance. What have you felt and seen and heard so far?
Well, Sergey, thank you first of all for inviting me to this interview. It's a great pleasure for me to meet you and to share views on the forum and on the investment environment with your readers and followers. So I myself count myself as a veteran of the Gaidar Forum. In fact, I have been working on Russia and particularly the Russian economy and investment environment for 25 years, and I remember events and conferences at what used to be called the Gaidar Institute of the Economy and Transition. I think it's now been renamed the Institute for Economic Policy, and those were the origins of what has now become the Gaidar Forum here at Ranepa. And I think there was always a joke about Soviet gigantism, that one would stress the quantitative figures for production or for economic activity. So I would stress not the quantitative aspect, 19,000 participants, but the qualitative aspect, that the Gaidar Forum offers a remarkably comprehensive and impressive overview of the state of thinking in all areas of public policy, which are relevant to the economy of Russia, its immediate neighbors, and by extension with global significance. And not only public policy as it affects the economy, but specifically the topic which is perhaps of greatest interest to us, how public policy affects the investment environment, risks and opportunities. And so I always like coming to the forum. I think I probably only missed 2 times the Gaidar Forum in the 10 years of its existence. I've seen personally how it has grown, as I say, not only in quantitative terms, in the scale of the activities and the number of participants, but in the comprehensiveness and the quality of the subjects and discussions. So I'm a very happy participant, and I'm sure that almost all of the other 19,000 would agree with me.
Great. And, well, since you're an outstanding expert in emerging markets, especially in this part of the world, would you say that you have observed any dramatic shifts in emerging economies of our region over those years that you have been involved in Russia and have been coming here to participate in Gaidar Forum?
Well, I think that the short answer is yes, and that is a reflection first and foremost of starting from nothing.
That's the best start, by the way, because the growth is higher.
The growth opportunity is higher in every respect. So that sounds rather banal, but I think one must start with the fundamental point. But what matters more is not the drama of the shift, as you put it, but again, the quality and the direction. And I think that in 2 areas you can see this very strongly in Russia and in the emerging markets that surround Russia. The first is in the economic policy environment and the regulatory environment as it directly affects the portfolio investment opportunities in debt securities and in equities. And secondly, after policy comes the issuers, emitienti, I think in Russian, the quality of the issuers and of their managements. So to take those 2 things in turn, in policy, and this is the major area for the Gaidar Forum, I mean, clearly in Russia there have been as you say, dramatic and very positive developments. When we started this type of discussion in Moscow at the Gaidar Institute, the struggle was for macroeconomic stabilization. This was back in the 1990s, the IMF standby program of January 1995 in particular, I remember, as a crucial breakthrough. But that now seems like ancient history. What we have now is modern inflation targeting, closely coordinated in a mutually stabilizing way with a new fiscal rule. And part of the fiscal rule is a very important stabilizer of the real exchange rate of the ruble, the real exchange rate, creating a very positive environment for sustainable growth of earnings, which is relevant to equity investors, and a positive environment for creditworthiness and credit fundamentals, which is what matters to fixed income investors. And so that macro policy environment in Russia has developed in a very positive way. This is acknowledged by experts around the world, starting with the IMF and the World Bank. The quality of Russian macroeconomic policy is exemplary. And this that is the foundation on which the even greater challenge of deeper structural reform, but designed to reduce investment risks, to enhance investment opportunities. That structural reform challenge can be addressed. Will it be? How far it will be successfully addressed is the eternal theme of all these events and discussions like the Gaidar Forum, and the answer will only become clear in probably another 25 years. But nevertheless, the environment and the foundation is sound, and this is, I would say, the key to the dramatic shift in the policy area. As for the issuers and management, this is business is represented here at the forum and is participating actively in many of the discussions. But perhaps it's not quite so central to this forum, but as the policy discussions. Nevertheless, it's crucial for the investment case. And I would stress here perhaps a point relative to equity markets, that Russia is now among the highest yielding equity markets in the emerging world. By yield, I mean dividend yield. This, I think, is a key point, that it's no secret that Russian asset valuations are relatively low when compared with many other emerging markets, let alone developed markets. And the reason for those valuations is clear. It has to do with external risks. Now, of course, focused on the sanctions risks in particular, but more broadly external vulnerabilities to do with economic imbalance, oil prices and so on, and also with domestic risks, the risks to property rights, to secure returns on investments as well. But the point about dividend yields is that whatever investors think about those risks, if you're prepared to take them, you get paid now on your portfolio of Russian equities, you get paid a yield. In other words, you are being paid to take an option on the positive scenario of those risks reducing in time. And that's an attractive proposition. And it's one that's, I can vouch as an investment analyst, speaking to many portfolio investors around the world, in Europe, in North America, in Asia. That is a proposition which is attracting attention. Now, attention doesn't mean that every investor will act on it, but it's certainly attracting attention. So just because many investors are not participating in the Russian capital market, does not mean that they're not paying attention.
Therefore, should I take your words as inviting foreign and domestic investors to invest in Russia?
You
At
should,
this particular
you
moment.
should, and I'm pleased you mentioned domestic investors.
Yes.
Because international portfolio investors, financial investors, will react always very strongly to what they see the domestic investors are doing.
The problem with domestic investors here is that their share is diminishing. I mean, it's
Which is why
pretty close to zero.
Which is why I would qualify that. When I started covering the Russian equity market in the 1990s, the international funds flows were completely dominant. The direction of the market was entirely dependent on them. This is no longer quite the case. I mean, I'm not arguing with you. I'd agree that the domestic investor base is still too thin or too narrow to have than would be ideal. But nevertheless, there has been some progress. However, most of the work is still to be done, and there I'd certainly agree with you. And that is why, in my own discussions with international portfolio investors, I always stress in particular the importance of the pension investment outlook, and in particular I think the Russian term is pensione nakопления, the investment pillar of the government pension scheme, the state pension scheme. I mean, this is of cardinal importance for the future of Russia's capital market. The channeling of a much greater portion of domestic savings from the public into long-term investments, especially in equities, will create a basis for demand, for stability, and for improved corporate governance, improved valuations, which will attract the attention of foreign investors. So I would say that that the development of the individual pension capital program, which the government and the central bank have been planning and discussing now for some years, and we've heard in many years in the Gaidar Forum about these plans, that is a crucial factor for the development of Russia's capital market. If it happens, it will be very positive. As I understand, the authorities here in Russia plan to launch this new scheme for individual pension capital, replacing the old
once again
scheme in January 2020. So in 1 year from now, we will see if it happens. It's a very important test.
You also mentioned another important aspect, the real, as you put it, value of ruble, a real currency exchange. Do you have any particular figure in mind when saying real value, real exchange rate of Russia's national currency?
This is no secret, Sergei. The Central Bank of Russia publishes, if I remember correctly, once every month, or certainly once every quarter, its estimate of the real exchange rate of the ruble. That is the ruble exchange rate as measured against a basket of currencies representing Russia's trading partners, weighted for their importance in Russia's external trade, and of course adjusted for inflation. And the real exchange rate of the ruble, its stabilization is, in macroeconomic terms, a crucially important factor for Russia's sustainable development, and in particular, allowing the Russian economy to exploit its natural comparative advantages to the full. In hindsight, looking back, even looking back to the years of plenty, as in the Bible it said, years of plenty, tuchne, gode, and the years of lean, toshe. So the years of plenty, in the previous decade, the Russian economy was growing very fast. Real household incomes were also growing fast. Living standards were increasing. What's not to like? Well, what was not to like was that the real exchange rate of the ruble in those times was strengthening all the time. making it very difficult for sectors of the Russian economy other than oil and gas, because the reason for the appreciation was the oil price being very high and the monetary and fiscal policy having no equipment to counteract that effect of the high oil price on the real exchange rate. So the oil industry itself felt well because the oil price itself was rising, but other industries with comparative advantage, especially export potential, but also the potential to compete with imports, they were unable to develop normally because they were made uncompetitive by the relentless appreciation of the ruble exchange rate in real terms. Now that has now changed. Thanks to the new monetary and fiscal policy framework, the real exchange rate of the ruble is now stable. And you can see this not only...
Well, it's questionable whether it's really stable, because I believe over the past few months the fluctuation was about 10%. And
Sergei,
for reliable currency, that's quite a lot.
The nominal, never confuse the nominal exchange rate with the real exchange rate. I'm not saying that the nominal exchange rate has no importance. It has considerable importance, especially on sentiment. If it is very volatile, then this discourages investment intentions, it discourages consumers, it causes uncertainty, causes negative externalities. I mean, this is all very conventional observations. But what matters in the medium to longer run is the real exchange rate of the currency. And this is actually, the currency is in fact getting more competitive in the last 12 months. And the central bank of Russia's assessments are, in this respect, very much supported by international measures. In particular, the Bank of International Settlements in Basel has a very good series on the real exchange rate of all major global currencies, and this is also shows the same picture. So the real exchange rate, and stable or even getting a little bit more competitive, thanks to the way that monetary and fiscal policy now excludes the effect of the oil price on the currency to a degree that was simply not the case before. That effect creates profitable opportunities which many sectors of the Russian economy, including chemicals, bulk chemicals, petrochemicals, agriculture, food processing, many sectors can have profitable opportunities both in external markets and in domestic markets relative to competing imports. And that creates the opportunities which companies will want to invest to take advantage of, and this creates a sustainable pattern of growth. So I mean, I would stress this not because I believe that this is anything new or that I'm telling you something which is not well known, but because in my experience of discussions with international investors, I find that even now, at least 2 years into this new paradigm of monetary and fiscal policy, even now I find that these changes are not widely or fully understood and appreciated by the community of global financial investors. So that's why I tend to stress them in my own analysis and in my own discussions.
And therefore, the core of your analysis, I would see as the current environment being favorable for the Russian economy, which we should expect to expand in the very near future. Is that the way to put it? Well,
I would agree with that, but here, Sergei, we're discussing investment. So that assessment has to be placed alongside valuations, because investors, they want to see fundamental risks and opportunities, and they want to see how those risks and opportunities are priced in today's securities markets, both for debt securities and for equities. So it's not a question of some absolute judgment. The Russian policy environment and the risk environment is very good or very bad. what matters is the correlation between the quality of the environment and the valuations. The valuations are extremely low relative to other emerging markets and certainly developed markets. And that reflects real risks, of which sanctions is clearly a very important risk. The question is, are the risks being overpriced or underpriced? And given the encouraging developments in a number of policy areas and other risk areas, there is at least a case for concluding that the risks are overpriced. They are excessively priced. You might justify some valuation discount for Russian assets, but how big? And is the discount which the market offers you now, is it excessive relative to fundamental risks? If it's excessive, then as an investor, you will want to invest. Well, every investor gives their own reply to that question, depending on their risk appetite, the mandate they have in their investment strategy, and so on. So it's not really a matter for us to say there is a right answer. There's no right answer. It depends on each individual investor. But certainly the fact that we see some flows into Russian securities from international investors shows that some investors see those valuations as attractive. Not all, in fact, perhaps not even most of them, but some of them. And you have to start somewhere in life, and to have a core of investors who are focused on the Russian market is already a necessary start. And to repeat a point which I made previously, even to the extent that many other international investors are not exposed to the Russian market, that does not mean that they are uninterested. They are paying attention, and they're looking to see when the risk environment may become more attractive. So that is I think perhaps the main point to stress.
Apart from various factors of risks, I would refer to a recent opinion poll here, and most of the population was not very happy about the performance of the local government, federal government, I mean. Mm-hmm. Would you agree with that opinion, first of all? And second, would you think such a performance of the government, whether good or bad, let's leave it outside our discussion, whether the performance and activities of the Russian government at the moment, they promote foreign investments or somehow cause troubles for them and do not solve the problems that for various reasons have accumulated in the investment environment of this country?
I would say that any serious reform program or agenda will always involve sacrificing short-term growth for longer-term gains. I mean, this is a theme of the Gaidar Forum, the Gaidar Institute for many years, that populist decisions are easy. You make people happy quickly, but at the cost of the sustainability of long-term growth. The strategy of the present government is clearly to try to promote in the long term a sustainable model of investment-led growth, because it's clear that there is no real potential for the Russian economy to grow based on consumption because of demographic factors, because of the lack of spare capacity. In economic terms, the output gap is almost non-existent. So it has to be based on investment, which will drive productivity. And productivity growth, as we know in economics, is the only secure and sustainable basis for increased living standards. Without volatility, without populist gestures which make everyone happy for 6 months and then everyone is very unhappy. So we are into a paradigm which in principle is attractive to investors. A country which is going for long-term sustainable gains. However, the risk is that if you avoid populism which is good, but the price you pay in the short term is very mediocre growth, low growth. People feel that the public feels that living standards are stagnant, and the public is not happy. Then this can then cause instability, which can undermine the attractive long-term policy goals. So, as always in life, it's a question of striking a balance. And I think that investors who look at risks will want to judge how great is the political capital of the government in any country. Do they have legitimacy? Do they have an underlying public support which will allow them to persuade the public to accept some sacrifice of short-term growth for the sake of longer-term growth? Now, I'm an observer of Russia from abroad for many years, so I have my own view. I think that there is considerable political capital here, although the public approval rating of the authorities is now declining, but from a very high base. So there is some political capital, but that's a judgment which perhaps I'm less well able to make as a foreigner than the domestic experts and observers. But certainly the question of the political capital of the authorities is always a risk factor which investors will pay attention to. Let's take a topical example in France, an extremely rich country, but now where we see a widespread unrest and protest by the public, and the political capital of the new French president elected less than 2 years ago has gone from what appeared to be very high to rather low in a short time. So that's just a live example of the importance of this factor for investment risk analysis. And in the Russian case, the political capital is clearly being used for the sake of this longer-term program. And again, there's no right answer, because it's a very subjective judgment, but also because the judgment must change. You asked me this question today, about the Russian public being not very content necessarily, but the same question needs to be put next week, next month, 6 months' time. Investment risk analysis is a process of constant assessment and reassessment. For now, my personal judgment would be that the political capital of the Russian authorities is adequate to continue this present policy course, which in principle is attractive for the investment case. But the answer, that would be my answer today. But we come back in 3 months and 6 months time. This is a question which is never boring, because it always needs to be reassessed in the light of events, shocks, realities.
Great. Thank you very much for your valuable opinions and expertise. We were happy to have you here.